Welcome to the Probate Nation. My name is Richard Ruddy. You know, estate planning often involves consulting with an attorney to discuss your goals and objectives, and typically that consultation seeks to gather information through an estate planning workbook you are asked to complete. Our show last week began a discussion about the what, which is an attempt to inventory all of the assets you have. Tonight we will complete that discussion. The goals of these two shows are to first educate you as to the importance of this asset information, to provide tips to consider in handling each asset, and finally identify some quick fix pitfalls to avoid. We are pleased to have back with us tonight two Northern Virginia estate planning attorneys. They will continue a review of the asset information gathered in a typical estate planning workbook. Let me tell you a little bit about our guest. John Morgan is a shareholder with the law firm of Reese Broom in Tysons Corner, Virginia. His practice focuses on estate planning and estate administration in Virginia, Maryland, the District of Columbia, and West Virginia. He is a graduate of the College of William and Mary and the Catholic University of America Columbus School of Law. He has an LLM in tax with distinction from Georgetown University, and he is a certified public accountant and certified financial planner. Also with us today is Alexis Abraham. Alexis is an associate with Bromley Law in Fairfax, Virginia. Her practice focus is estate planning and administration, guardianships and conservatorship proceedings, and estate litigation. Alexis also frequently serves as fiduciary for trusts and estates. She is a graduate of the Virginia Commonwealth University and George Mason University School of Law. Please welcome back attorneys John Morgan and Alexis Abraham. Alexis, thanks for jumping back in here and to continuing this discussion. We're going to jump into the topic of life insurance policies. What information, Alexis, is important to collect about these assets?
Sure. We want to know what type of policy. Is it whole? Is it term? The approximate value of the death benefit, the policyholder and the insured person if different, the beneficiaries, whether it has any cash value, and when available, the insurance agent's contact information.
Is it important to know the purpose of the life insurance death benefit? I mean, why do we have the insurance? Is that important to know?
Absolutely. Life insurance is often used to provide financial support for loved ones who survive you. Sometimes it can be used as a way to pay debts or address certain tax obligations. So it's a good idea to periodically confirm that the policy is still serving that intended purpose.
Sure. Now, talk a little bit about the importance of both understanding and confirming the beneficiaries named in a life insurance policy.
Yeah, so beneficiary designations control who receives the proceeds. So it's critical to make sure that the designated beneficiary reflects your wishes and is properly documented with the insurance company. It's also important to periodically review those beneficiary designations to ensure that's still an appropriate person, that still serves the purpose of the policy. And sometimes these insurance policy holders change hands and those beneficiary designations don't travel with it. So always a good idea when you're thinking about your estate plan to pull up and confirm those designated beneficiaries. You
know, that last thing you mentioned is something that I actually saw in real life with a client who had sent in his beneficiary designation, filed it, had her information back saying it was, had been filed and it was as he had requested. But I said, well, just for grins and giggles, go ahead and call them and just see what they have on file. And lo and behold, they didn't have it. They had something from before, which was completely wrong. So I think that's a very good suggestion. You definitely want to double check that along the way and make sure that it's proper. The other thing I would observe is, do you find yourself advising folks to consider talking to an insurance agent to get insurance in certain situations?
Absolutely. Yeah, especially, well, there's a lot of reasons why, but especially when I'm talking to young families.
I think that's true. We had a fellow come through one time who he had a young family. He was doing very well, very successful young guy. But he said, I said, well, what happens when you die? And he said, my wife has the equity in the house and she has my retirement account. And I said, well, she can't eat the house, okay? And that retirement money is really to take care of her retirement 20 years down the road. So, I mean, you really need to get yourself some life insurance. I think that's probably one of the best things we can ever do as attorneys is point people to somebody that can help them evaluate that better. So I think that's good that you do that. John, I'm going to come to you now to talk about the next big bucket of assets, which is retirement accounts. What initial information is important to collect about these types of accounts?
First, we'll want to know the type of account, whether that's a 401k, IRA, Roth IRA, TSP, 403b, 457. We'll also want to know where the accounts are located. That is, who is the custodian of the account, whether that's Fidelity, Vanguard, someone else, the current value of the accounts, as well as the current named beneficiaries, if there are any. So
tell me, what are of all that stuff you've mentioned, what are the two most important pieces of information that you really want to make sure you know?
I would say probably the type of account, that is whether it's going to be subject to income tax for the beneficiary or not, as well as who the named beneficiaries are, because named beneficiaries could conflict with the documents in a person's estate plan, thereby really disrupting the intent behind the overall estate plan.
Now, you mentioned something that I think we should just pause for a second. You know, you're writing a will and you have plans as far as who it's supposed to go to, which we'll talk about in future shows, but you really have these other assets that move outside of the terms of the will frequently. And you do want to make sure that everything is working in concert properly. So I think it's something people sometimes overlook. They think I'm going to avoid probate by naming a beneficiary, and next thing you know, that's inconsistent with what their ultimate goals are. Talk a little bit more about if you could, about the importance of the types of accounts, because you mentioned that there are some tax differences depending on the type of account when distributions come out.
Just as a Roth account is going to have tax-free distributions to the owner, distributions to the beneficiaries after the owner's death are also going to be free of income taxes. In terms of traditional retirement accounts, just as the owner would recognize income as distributions are taken out, the beneficiaries would be as well. A lot of my clients think that means it's taxed all at once. That is generally not the case. It's only when the beneficiary actually draws from the account.
Right, okay. And of course, there's been a bunch of new rules. So can you explain how the beneficiary named may be important to how the money comes out and how it gets taxed?
Under the terms of the Secure Act, most beneficiaries generally cannot stretch distributions out over their actuarial lifetime, which was previously the rule. Some beneficiaries, such as surviving spouses, can. There are some other exceptions as well. But the general rule for most beneficiaries is they have a period not to exceed 10 years to take out their distributions. If, however, there is no beneficiary named and it goes to a person's probate estate, generally then there's a 5-year payout. And as that is an ouch. And just as the time is compressed to take distributions, the taxes can also be compressed, meaning that there'd be more aggregate tax paid in all likelihood in that situation.
So this is something that really is important to discuss carefully, gather good information about it, and really have a plan that often, like I say, works kind of outside, but needs to work in concert with your will document. So it's a very, very important area of assets. Alexis, in this area, we see a lot of folks that have business interests. Do you see a lot of that in your practice?
I do. A lot of folks have some sort of business interest that comes to my office.
So what information is important to initially collect about businesses that people might have?
Sure. We want to know the type of entity. Is it an LLC, a partnership, a corporation? We want to know who owns the interest. If you're dealing with a couple, do they both have an interest? Are there other members or shareholders? The approximate value of that interest, and whether there is a governing instrument for the entity, like an operating agreement or bylaws.
So tell me a little bit about the relevance of all this information.
So business interests can create significant estate, income, tax, and succession planning issues. So gathering all of these details allows the estate planning attorney to best advise.
And is there a transfer or an inheritance of the ownership interest subject to any sort of restrictions, or do we need to know that?
We do. So if there is a governing instrument, sometimes there are restrictions on who can become a member or a shareholder of that entity within that instrument. So that will impact the way that we can advise that client.
Which means that typically often they have to get consent in order to do that. You may actually inherit the economic interest, but you might not have any rights to vote or anything like that. I believe that's what I typically see. Is that what you see?
Exactly. Yeah, that's a really common restriction we'll see. So sure, you can inherit, the profits or the value of this, but you're not going to become a member of this LLC. You're not going to have any voting rights, any power, and sometimes limitations on even information you can get on that business.
Very important to know that, yes. John, let's talk about the next thing, which we've seen it from time to time, is someone has loaned money to friends, family, and so on. What information do we want to collect about these types of debts that are due a person that's trying to do an estate plan?
First, we'll want to know the identity of the debtor. Beyond that, if there is a formal promissory note, we'll want to know the date of the note, the maturity date when the note comes due, who the payee is, and the current balance due on that debt.
Okay. And tell me a little bit about why then all this information you say we want to know, why is this all important?
Well, first, to project any collection issues. As we might say in the accounting world, is this an aged receivable? If it's a very old debt, nothing's been collected so far, it may be the case that there are going to be some problems collecting on the note in the future. We'll also want to know if the debtor is still in business. Has the debtor filed for bankruptcy? Is the debtor otherwise insolvent or being unresponsive to attempts to collect the debt? Beyond that, we'll want to see, in terms of who the payee is, whether there might be an opportunity to assign the debt to a trust or some other instrument, thereby avoiding probate. Okay.
And that really requires some detailed information, and certainly if there are documents involved, would involve having to review those documents. Alexis, I think you brought up when we were preparing for the show something that many people overlook, which are these things called digital assets. So you and John are both from that generation where there's a lot of digital assets that are being accumulated by you guys in all these various types of accounts. So tell me a little bit about, what are some of the common digital assets that should be carefully itemized in any estate plan?
So a digital asset is any electronically stored item that you have a right to use. So this can include things like email accounts, social media accounts, online storage accounts, cloud-based files, and increasingly recently can include things with financial value like cryptocurrency and other digital financial assets.
Okay. And what type of information should, it's part of an estate plan, should the person be collecting about these digital assets to pass on to their executors or family?
It's important to identify what accounts exist, who has access to them, how they can be accessed, and their value if they contain financial assets.
Okay. I would think probably one of the biggest things I see in my own family is all the pictures we have that are just up in the cloud. Everybody takes their pictures up to the cloud because they're too big to hold on your home computer. And the next thing you know, someone passes away and all those pictures could be lost. So, John, staying on the topic of digital assets, is there anything that can be done in the course of estate planning to make sure these digital assets are not lost?
I'm sorry, I had trouble hearing you there.
It's okay.
In terms of making sure that the assets are not lost, we'll want to see if there is a designation on each account about who has the right to access the property. It's a good idea to make sure the executor is granted access to the digital assets. If there's an opportunity to maybe make life easier for the executor by giving them usernames and passwords to be open in the event of your death, that might be a good idea. And it's also important to note that the terms of service are going to control if there's no other designation.
Yeah, I know that in preparing for these shows, the terms of service can be very restrictive and could find that you don't really have access except through a rather grueling review process to get yourself in front of the right people. John, is there any legal consequence to accessing online digital assets of a decedent without the authority to do so?
I've not seen this actually happen, but there is the potential for criminal ramifications if that is done.
Okay. Now, we certainly see a lot of people talk about, they have mom or dad's online access information to take care of paying their bills, so they have access to a checking account. And then mom or dad passes away, and they continue to use that online access to do stuff. Do you see that much in the course of your probate work?
I see it on occasion. Technically, the authority to do that lapses when a parent or other owner dies. Just as a power of attorney no longer becomes valid when the principal dies, so is the case with an authorization to use an online account like that.
Sure, sure. Now, Alexis, I know you do a lot of probate work, isn't that correct?
Yes, sir.
So I know that one of the things that when you're first accounting to the commissioner, one of the things that they make you do is you have to take the decedent's bank account from the date of death and report all of that activity through the end of the first accounting period. Is that where they would pick up this unauthorized use and access of accounts?
Absolutely, yeah. So you have to report from the day that person passed away, which may not be and often is not the same date where you actually might have acquired that asset as the fiduciary.
Sure.
So you're required to report on that interim period, and if there was unauthorized access, it will become apparent.
And that's where you'll have the commissioner knocking on your door to ask you to explain. So
Sure.
let's talk about, John, let's come back and talk for a second about other assets. So I'll start with you, Alex, since I have you in front of me. What are some examples of other assets that you have seen or disclosed or discussed with clients during the course of your estate planning work?
Pets are a big one. While technically considered personal property, pets are very near and dear to a lot of people's hearts and want to plan for their care after their passing.
Okay. John, how about yourself? What are some of the things that you see in the way of assets that people tell you about that we haven't really discussed? It's kind of the other asset category in our discussions.
Family heirlooms that might have no sellable value. Examples, cards with recipes from the family, maybe diplomas from the decedent's graduation from college or law school, graduate school. One I haven't seen, but I've heard talked about would be frozen embryos, and we're probably going to be seeing more of that as we have more technological advances.
It's curious that this came up because probably 20 years ago, I had one of my clients tell me that he had frozen some of his embryos. And I thought, well, that was kind of unusual, but apparently that's something that people do. Well, John, let me continue with you as we kind of get to as we're kind of winding down here. We have a little bit of time, but talk a little bit about some of your final thoughts that you'd like to share with our viewers about some of the things we discussed during the course of these two shows, some pitfalls that you have seen that you hope people will avoid, and other advice you might share with folks as they begin to accumulate all this asset information to share with their attorney.
It's not a good idea to withhold information about one's assets from the estate planning attorney. There might be a very good way to plan for something that the attorney cannot advise a client on if he or she doesn't know about a given asset. It's a good idea for the client and maybe even the attorney to double check title on assets to make sure that we don't have an unintended consequence based on the beneficiary designation or the titling of assets. And that's particularly the case with life insurance. I can't tell you how often I've seen young parents try to use as a will substitute, naming the oldest child, who might be 9 years old at the time, as the single beneficiary for a life insurance policy. And there are a lot of pitfalls with that approach.
Of course, of course. Alexa, how about yourself? Some of your final thoughts, and I'm going to throw in a few of my own.
Sure. So I always remind my clients that they should not treat the estate planning process as a one-time event. They should periodically review their assets, their will if they did one, their beneficiary designations certainly, to make sure that that plan continues to reflect their goals and still protects the people they care most about.
I agree with you really very strongly. I think you guys mentioned a couple of things about making sure that you tell your attorney everything. And this is not just for estate planning, but also for the people you're naming as executors to handle the estate after you passed away. A lot of times they don't really even know what you have. And doesn't mean just naming the account. I mean, see, if you have a bank statement, you'd like to see a copy of that bank statement in the file. You have a brokerage statement, so we have something that they can get started with, so they can hit the ground running once they get appointed, if they're going to have to go through probate. The other thing is the beneficiaries. I couldn't agree with you guys both more. I mean, checking those beneficiaries on life insurance is really important. If you happen to be a person that has a lot of creditors that's going to pursue you, have you guys found it helpful to have somebody else named as the beneficiary on the life insurance policy rather than make it payable to the estate because the creditor can't get to it? Have you seen that at all, Alexis?
Absolutely. Yeah, life insurance policies are afforded certain protections from creditors of the decedent's estate. So making the policy payable to the estate is going to expose them to those creditors. Whereas if you put a child or some other individual, you're going to get that protection.
And that can be very important. And John, I know we talked a little bit about retirement assets, but these are typically a big bucket on the asset table. Tell me some of the things that you have really encouraged folks to do with those buckets of retirement assets as you do planning for them.
Really depends on the client. If it's a client who has only adult children and the client doesn't want to put any restrictions on them, I generally recommend naming the children individually as beneficiaries of the retirement account rather than a trust. On the other hand, if it's a young couple or a person with young children, I generally think it's a good idea to name a trust as the beneficiary instead, so that you don't have a windfall going to an 18-year-old who potentially might not be able to manage it. If I go back to one thing you said a minute ago, Richard, about life insurance, another thing to keep in mind there about beneficiaries for life insurance policies is that doing so might also avoid what would otherwise be subject to the inheritance tax. In a state like Maryland, for example, if you have a life insurance policy designated as going to a person who would otherwise be subject to the inheritance tax, by virtue of having it be life insurance and having a named beneficiary, it avoids that 10% tax.
That's a big deal in Maryland. Yes, I agree with you. I agree with you. Yeah, there's a lot of little nooks and crannies, and I think that's one of the things I hope people will take away from this particular show and all that you guys have shared, that full disclosure is critical. There are ways to deal with any of these issues that you might have or accomplish your goals and objectives, but we cannot do it unless you tell us all the assets that you have. So be forthright with your attorney. I think that's probably what I take away from these two shows. In any event, on behalf of the Probate Nation television audience in Virginia and around the country, I want to express my appreciation to John and Alexis for taking the time to share all this great information. Thank you for this awesome and valuable public service. You know, if you have plans to meet with an attorney to discuss creating a will, these two shows are an excellent preview of asset information you will need to disclose. Hopefully you will be motivated by these shows to carefully collect and disclose all of the information about the assets in your estate. If you do so, your will plan will accurately implement your wishes, your family will thank you, and you will save some attorney fees along the way. This brings us to the conclusion of our show, and I truly hope you found it helpful. Replays can be viewed on the Probate Nation YouTube channel, and if you want to receive monthly estate planning and probate tips, please sign up for the free Probate Nation newsletter at probatenationnews.com. Many thanks for tuning in. Until next time, I am Richard Ruddy, and this is the Probate Nation.